everyone, welcome to the Coin Engineer YouTube channel.
In this video of the training series, we will talk about Bollinger Bands. We can access Bollinger Bands directly by typing Bollinger Bands in the indicators section here. Friends, this is how Bollinger Bands look. Friends, there are three lines, the lower line, the middle line, and the upper line. As you can see here, Bollinger Bands are a volatility band frequently used in technical analysis developed by John Bollinger in 1980 that is placed above and below a moving average. Volatility is a variable dependent on standard deviation, and fluctuations in volatility affect the standard deviation. When volatility increases, Bollinger Bands widen. When volatility decreases, Bollinger Bands narrow. As you can see here, volatility is decreasing a bit. The Bollinger Bands are narrowing, friends. Here, the Bollinger Bands are widening when volatility increases. Now, let's take a look at the daily chart as well. As you can see, the Bollinger Bands are currently expanding, friends. This also indicates that volatility is increasing. So what does this mean, friends? Losses and gains are occurring in large amounts here. Positions should generally be taken when the Bollinger Bands are narrowing. As you can see here, for example, there is a significant narrowing. Here, a direction should be determined by identifying other indicators, and a position should be taken accordingly. For example, here, you can see that there has been a narrowing again. For instance, we mentioned what other indicators there are. We can look at moving averages or the material from here, as you can see. Since it has given a sell signal, we can determine that the direction is downwards, and considering that volatility will increase, we should take our precautions. Here, friends, this is how Bollinger Bands are used. Now, let's examine this on a 4-hour chart. As you can see here, when the Bollinger Bands touch the upper line multiple times, it is generally considered a sell signal. If it touches the lower line multiple times, it is a buy signal. Therefore, important buying techniques in Bollinger Bands can be as follows. When the Bollinger Bands are extremely narrow and there is a sharp spike below this line, meaning the lower line, if we make a purchase in this area, our chances of making a profit are definitely high. So, for example, a person who is currently buying below the Bollinger Bands is likely to sell around here soon. So this resistance here, friends, can give us a profit until it reaches this resistance. Of course, the point where you buy below the line, for example, if you buy here, you can see that you are making a profit. Here, if you buy, you are making a profit. The profit ratio varies. For example, let's examine the hourly chart a bit. Right now, for instance, we are not below that line on the hourly chart. Even if we buy, we need to act immediately when it reaches this point on the hourly chart. As you can see, if we buy at this line, we can sell at good levels right away. Conversely, if it excessively breaks above the Bollinger Bands, as you can see, it has broken out excessively here. So if we sell above the Bollinger Bands, we are definitely selling at a profitable point. If we sell where the line spikes, this is how Bollinger Bands are used, friends. This is also an indicator that I generally use. It's quite simple and logical. You can access it on all mobile applications. Definitely use these Bollinger Bands. You can make your trades based on this band. Thank you all. I hope I was able to explain it. See you soon.